By the end of this video you'll understand why the AI industry's biggest problem isn't what they're telling you, and why it could bring down companies worth more than entire countries. This week OpenAI became worth $852 billion, making it more valuable than most nations. Google open-sourced their latest model while a chip startup raised $60 million, claiming they'll revolutionize semiconductor design, and researchers are forming virtual labor unions to negotiate with AI systems. But here's what nobody's talking about: all three stories are actually the same story in disguise. Let's get into it. OpenAI just closed a $122 billion funding round, valuing the company at $852 billion. That's more than the GDP of Turkey for a company that didn't exist when TikTok was still called Musical.ly. The Guardian reported they're pulling in $2 billion monthly in revenue, which sounds impressive until you realize this is all private market money. No public scrutiny, no quarterly earnings calls, just whatever investors were willing to pay in a closed room. Either we're witnessing the birth of the most valuable company in human history or watching the most expensive game of hot potato ever played with venture capital. The real kicker? A company burning cash on compute like it's kindling just became worth more than Tesla and Meta combined. We're either all going to be working for ChatGPT by 2030 or someone's about to get very rich selling before the music stops. But here's where it gets interesting, and why this connects to something much bigger happening in the industry. Before I get into that, I want your hot take on this. Comment below: is OpenAI actually worth $852 billion, or are we watching the biggest tech bubble in history? Meanwhile, Google just open-sourced Gemma 4 under Apache 2.0, which seems generous until you realize what's really happening. They're not doing this out of the goodness of their hearts, they're making models a commodity so they can win on the infrastructure that makes models useful. While everyone fights over who has the best large language model, the smart money is flowing somewhere else entirely. And speaking of smart money, Cognichip just raised $60 million, claiming their AI will cut chip design costs by 75% and slash timelines by more than half. They say they've cracked the code that Intel, TSMC, and Synopsys couldn't figure out. Either they're about to revolutionize the most complex engineering challenge on Earth, or they just raised the most expensive way to learn why chip design is impossibly hard. Every electronic design automation company has been trying to automate chip design for decades with mixed results. The fact that Cognichip thinks they solved it with AI either makes them geniuses or proves that venture capitalists will fund anything with artificial intelligence in the pitch deck. But there's a pattern here that reveals what's actually happening. Drop your hot take in the comments. Do you think AI can really automate chip design, or is the $60 million about to disappear into the silicon graveyard? Here's the thread connecting all these stories. SK Hynix is planning a $14 billion US IPO specifically to solve what they're calling Armageddon. Tsinghua researchers just published a paper claiming they can optimize AI inference to use 75% less memory. Academics are racing to compress AI contexts to fit smaller memory footprints. These aren't random events, they're symptoms of the same underlying crisis. The AI industry has hit a hard ceiling, and it's not compute, it's memory. While everyone obsessed over GPUs and training runs and who has the biggest model, the real bottleneck became memory bandwidth and capacity. OpenAI's $852 billion valuation is built on a foundation that could crumble if they can't solve the memory wall. Google is open-sourcing Gemma 4 because they know the real value isn't in the models anymore, it's in the infrastructure that can actually run them efficiently. Cognichip raised $60 million not because AI chip design is easy, but because the memory crisis is so severe that investors will bet on anything that promises to make chips more efficient. This is why every major AI announcement this year has a memory angle. It's not about making AI smarter, it's about making it fit in the hardware we actually have. The dirty secret of the AI boom is that we've built models that are too big for the computers that run them. And that gap is only getting wider. If you want the full breakdown every Monday, Wednesday, and Friday, completely free, I go 1,000 words deep in Overfitted. Link in the description. No fluff, no hype. Just reality checks on what's actually happening while everyone else is drinking the Kool-Aid. The mainstream tech press won't tell you about the memory crisis because it doesn't fit the narrative of endless AI progress. But understanding this gap between ambition and infrastructure is how you predict what happens next. Like this video if the memory crisis explanation clicked for you. Share it with someone who thinks AI companies are actually worth their insane valuations. And subscribe so you don't miss next week when I break down why the AI talent wars are about to get even weirder as companies compete for engineers who understand hardware constraints, not just transformer architectures. If memory becomes the new oil of AI, who controls the supply chain, and what happens to innovation when the hardware can't keep up with the hype?